Hello, I'm David Mandy, President of O&M Partners. I want to welcome everyone today to the Blackrock Gold Corp Town Hall broadcast. Blackrock gold trades on the TSX under the symbol BRC, and they also have an OTC listing in the States, BKRRF. For those that are new to these broadcasts, O&M is the link between the non-deal investing public and public companies. In the past, these groups passed each other like ships in the night. Our digital roadmap enables us to keep pace with the tremendous changes in this market demographic and how they receive information. We want this broadcast to answer all your questions. Questions will be easily answered by going to the question portal of GoToWebinar or by emailing us. For any questions that remain unanswered, we'll follow up in a timely manner right after the call. For those who dialed in on your phone, the only way you'll be able to hear the pre-recorded introductory presentation is on your computer. If that's not possible, you'll be able to hear the main presentation after about 15 minutes. So please stay tuned. Before we turn to our hosts, it's a real pleasure to introduce special guest Brian London, who's the editor of Gold Newsletter. Brian has been in the investment markets for 4 decades. He served as president and CEO of Jefferson Financial, which is a highly regarded producer of investment-oriented events, and it's a publisher of investment newsletters and special reports. Brian's always been a font of knowledge on the mining industry and other industries, actually. Under the Jefferson Financial umbrella, Brian serves as publisher and editor of the Gold Newsletter. The publication has been the cornerstone of precious metals advisory since 1971. And as he's also the host of the New Orleans Investment Conference, which is the oldest and most respected investment conference of its kind. As editor of the Gold Newsletter, Mr. London covers not only resource stocks, as I said, but also the entire world of investing, from small caps of every type of company to macroeconomics and geopolitical issues that ultimately affect every investor. So on that note, it is a real pleasure to turn the call over to Brian.
Hi, everyone. Thanks for letting me on here again. Great to be with you again. I'd like to give you some of my views on the gold market. And as you can see, my view is we're in a new metals bull market, specifically a gold bull market that will kind of drag everything else along it. So I have a number of slides here I'd like to go through, and I'm going to go through them pretty quickly and try and summarize the situation as succinctly and hopefully as compellingly as possible. But we all know what's going on. The COVID-19 pandemic has created a dramatic economic downdraft globally around the world. And my view, and a lot of people share it, is that this was merely the pin that pricked a massive existing bubble. What has happened in response has been extraordinary. The policy responses from central banks and governments has dwarfed anything seen before, not only in speed, but also in degree. Here we see a sign of that. We see total Fed assets. They absolutely exploded. You can see that they started off actually last August, a little over a year ago, a little less than a year ago. At the end of August, they started some form of quantitative easing at the Federal Reserve, but then really took off in March as they responded to the economic slowdown as a result of the pandemic. You can also see right at the peak, it's actually slowed down a bit and decreased. The Fed buying has dropped in the most recent week by about 73 billion, or their total assets have dropped by about that much. I think that's merely a blip in the run up. And what we're going to see is that by the end of July, some of these fiscal programs in the US, these stimulus programs will run out And over the next couple of weeks, we're going to see the bidding war in Congress in the US begin and accelerate as they start to write blank checks again. And I think that will be the impetus for another rebound in the markets, the gold markets. But as we can see from this chart, which combines or compares the the Fed's QE programs, both post 2008 and post pandemic, you can see that the current COVID-19 is labeled on here, quantitative easing program, dramatically outpaces and dwarfs anything ever done before. You can see QE1 is the gold line, QE2 is the green, and then the blue line, which was QE3, which was essentially unlimited quantitative easing. The Fed immediately shifted, immediately went to unlimited quantitative easing in response to this crisis. This is the kind of thing that I had been predicting that they would have to do in the next economic downturn. What I and no one else predicted was to see something that we expected to develop over 3 to 5 years, essentially happen over 3 to 5 days, as the Fed really just immediately went into ultimate quantitative easing mode. So this quantitative easing infinity was immediately supplemented from the central bank side of the equation. They immediately went to the fiscal side, and we saw helicopter spending. That term has been in vogue or popularized for a number of years in regard to what the Fed could do. Nobody really thought at the time that they wouldn't need helicopters. They could just direct deposit, which is what they did. The result, of course, has been an absolute explosion in federal debt, as we see on this next slide. The national debt, the federal debt, is about 27.5 trillion right now. Interestingly enough, that's up 500 billion over just the last month, and it's accelerating right now. The federal debt to GDP ratio is 132%. That was around 103 to 105% for a number of years in recent years, and kind of held steady there as the GDP actually grew. What we see happening now is that spending and the debt is exploding to the upside, and the GDP is actually declining. So that number, which is critical, is exploding to the upside as well. As a point of reference, the World Bank and a number of other institutions regard a federal debt to GDP ratio of around 70% as a warning sign. And now, as you can see, we're at 132% in the US. So what are the implications of this massive debt load? Simply put, it's ultra low interest rates forever due to the costs of servicing the debt. The debt is so large at this point that if we had real positive interest rates of any significant degree, then the debt service cost would just explode the federal budget. So the Fed, for a number of reasons, and as long as it can control interest rates, will have to have ultra low and even negative real rates of interest maintained. And of course, gold loves that. Gold loves negative real rates. As you can see from this chart from our good friends at Incrementum, who put out the In Gold We Trust annual report, the blue areas indicate periods when negative real rates maintained. As you can see, the gold line is the gold price. And whenever we're in those blue shaded areas, when we had significant periods of negative real rates, the gold price outperformed. We will again have negative real rates going forward for essentially as long as this monetary regime remains in effect. Now, if you look back, I think there's a great lesson that we can get from the 2008 crisis, even though this is proceeding much more quickly than we saw post 2008. Essentially, if history doesn't repeat, if we don't see precisely the same kind of progression that we saw in 2008, it's going to rhyme fairly closely, and that's instructive for the kind of bull market I think we're about to see. So let's take a look at that. If you look back at the 2008 financial crisis, you can see that just as it began, he had tremendous declines and updrafts and declines again in the gold price. Just absolutely remarkable volatility. The price would go up $100 over the course of a couple of days and down $100 over the course of a couple of days. And this was massive liquidity driven selling when investors and speculators had to sell anything that wasn't nailed down to raise capital to meet margin calls and the like. That's what we saw at that point in time. And then we can see that post that reaction, as investors started to respond to the policy responses and realize what those meant, all those federal programs, quantitative easing, all these unprecedented steps that the Federal Reserve was taking, investors started to respond to that, and they started to buy gold. As you can see in this chart, after the financial crisis, fear turned to greed, and investors were buying gold in reaction to unprecedented monetary stimulus. From these lows of around $700 or thereabouts to the highs of over $1,900, the gold price nearly tripled over the next couple of years in response to this extraordinary level of monetary stimulus. That essentially is what we're going to see right now and what we're seeing. And let's take a look at that. Let's take a look at where the metals are now in this crisis. Here we see a chart of gold over the last 6 months. And as you can see, we had that severe downdraft in early to mid-March. Tremendous liquidity, again, a liquidity-driven sell-off where the gold price was taken out to the woodshed. But then we saw a very swift, very similar to post-2008, we saw a very swift rally up to the high 1700s. But then from about mid-April till just recently, gold was trading in a range, kind of digesting that big move up from mid-March. We've been trading in that range, and literally over the last couple of days, and as you're watching right now, we've broken out of that range. That key resistance point was around 1780 to 1790, and gold has actually popped right back over $1,800. This chart is about a day old, but gold on a continuous contract basis has popped back over $1,800, and on a spot basis is nudging right up against that mark. So this is a crucial area from which we can expect and hope to see a breakout going much higher. And frankly, after this, after it gets past $1,800, I think a rise to over the previous record of around $1,920 is very much in the cards and could happen very quickly. Looking at some technical indicators that I like to follow, one of these is the 14-week stochastic. As you can see down here in that black box, the stochastic, which is a measure of momentum, remains in the upper half of the range, and specifically above that key 80 level. And that's what we want to see. If you go back to the 2004 to 2007 range, when we saw just tremendous gains in gold and the associated investments like mining stocks, the stochastic managed to stay above that 80 level without any significant pullbacks for some period of time. This indicates sustained upward momentum, and that's really what we like to see. And again, that's what we're starting to see, this kind of pattern once again. I'd like to bring your attention to the Bollinger Bands for gold. As you can see, they compressed or pinched. That indicates a period of lower volatility. Going back to my slide a couple of slides ago, when gold was trading in that narrow range, the volatility collapsed. What happens is that gold, or really any commodity or any asset that shows this kind of a pattern, when you have this extended period of low volatility, these bands compress and they predict or foreshadow an increase in volatility. Bollinger Band squeeze has formed once again. And when you're in a market that's on an uptrend, like gold is in right now, this is another technical indicator that's foreshadowing or predicting a significant breakout in gold to the upside. So the bottom line A new gold bull market is in progress right now. I think that investors have seen that not only in the gold price, but in the mining stocks. The junior mining stock market is absolutely on fire, and we'll be riding the rise in the precious metals much higher. Let's try and get a look at what kind of potential we're talking about right there. Here we see that gold has huge upside in real terms, and this chart shows gold's price peaks in today's dollars. So if you go back to 1980, January of 1980, we remember that the nominal price record for gold was $850 back then. Well, in current dollars, that's over $2,800, or 1.86 times the current price. If we just go back to the peak in 2011 of $1,920, in current dollars, that's $2,142. So that alone is a 42% gain, just to equal the previous record of 2011 in real constant inflation adjusted dollars. So that's a lot of potential for gold itself. Now, if we get to silver, we have huger upside, as I call it. For gold to get back to its price peak of $50 in 1980, that's equivalent to $158 in current dollars. That's a 9 times multiple. Even if gold gets back to its price of $55 in April of 2011, we'd see a 3 times increase in silver. So gold has a lot of potential. Silver has a natural leverage to gold and naturally more upside. Now, a lot of people play the junior mining stock market, and there you have all of these factors plus the potential for discovery. That's one of the reasons why we like to focus in Gold Newsletter on discovery stories, because that gives you a lot of attention brought to the sector or brought to a particular stock because of a gold bull market or a silver bull market. But then you have the added potential, which can be explosive, of actually finding something. Here we see an example on that, which I call hair on fire upside, or represented by junior mining stocks. One of the biggest winners in recent history, a generational discovery, was Great Bear Resources. We picked that, one of the first people, one of the first newsletters to get our readers onto that. And that stock is up 55 times from our entry price in a Gold Newsletter alert. So this just gives you an idea of the kind of explosive upside potential in junior mining stocks, in the best ones, the ones that are about to make a really big discovery, if you can find them right before they make that discovery. So that concludes my presentation for you today. You can find me at goldnewsletter.com, the New Orleans conference.com. It's October 14th to 17th this year, and you can find me on Twitter as well. Thank you.
Thank you, Brian. Very enlightening. Great to have you on as an introductory speaker. Now we're going to move to our hosts. We have Andrew Pollard, who's the CEO and director of Blackrock. And we're also pleased to have Bill Howe, the executive chairman, on the line with us. Andrew really cut his teeth in the mining industry as a management consultant, and a very sought after management consultant. He started Mining Recruitment Group in 2006 and built a who's who network in the mining and finance world, which really helped him shape what have become some of the most prominent and successful resource companies in the business. In the sector where management is crucial, Andrew has served as a trusted advisor to exploration companies and producers ranging in size from seed round through to over 100 billion in capitalization. And I've known Andrew a long time. It's a real pleasure to be working with him again. We also have Bill Howe, executive chairman. Bill is a successful mining entrepreneur. He's founded several public companies. We've worked with him in the past. He's been tremendously successful. He led exploration division of major mining companies as well. He has extensive experience building exploration teams and delivering quality resources, quality economic resources. As an executive, Bill provided strategic vision. He's provided planning and implementation of many, many junior and senior gold producers. Most recently, he led the acquisition, build out and startup of the Florida Canyon mine in west central Nevada. The mine achieved commercial production within 18 months of being acquired, which is just incredibly, just explain it. That really shows you how good Bill is what he does. And to date, Bill's raised over approximately about 300 million in project financing for properties all over the world. But mostly, I would think he would say that he's really happy to be back in Nevada. On that note, I'm going to turn the call over to Bill. Excuse me, my mistake. I'm going to turn the call over to Andrew, and then Andrew's going to turn the call over to Bill. Andrew, over to you.
Thank you very much, David. Let me just pull things up here. Here we go. All righty. Well, apologize for my hair, everyone. Thank you, David, for the introduction. It was also really, really nice to have that intro from Brian London, because Brian's been a huge supporter of us over the past couple of months, and he's got a very good outlook for gold, but as you saw, he's got an even huger outlook for silver. So, he couldn't have picked a better story. And I think it was May of this year when Brian really got behind us, and he's a good guy to have as a shareholder, because he's been very, very, very good. So I hope my screen's up here. So yeah, we're going to be making some forward-looking statements here.
You look good.
Going to be you're good, yeah. So this is going to be a presentation that's largely in the form of a Dickens novel, because what we're going to be spending a lot of time on here is looking back into the past. We're going to be talking a little bit about what we're doing in the present, and I hope to leave you all thinking about what might happen in the not so distant future. So if I could sum up Blackrock in a few things, we're certainly Nevada focused. If you've made your way onto the presentation today, then I don't need to tell you that Nevada is the place to be. I mean, when it comes to the gold context, if this were Roman times, Nevada's Rome. Now, not many people know, though, that before Nevada was known for gold, their precious metals potential was originally found on the back of silver, and that was on the back of the Comstock lode in about the 1860s, and it was on the back of another district, and that district's known as the Tonopah Silver District. It was discovered in 1900, and it was one of the last district-scale discoveries made in Nevada up until World War I. Now, Blackrock, we're after two things. We've got two projects. We're after big grade and big ounces. We're chasing high-grade gold and silver veins in what we think is the best jurisdiction you could possibly be in the world. Now, for the purposes of this call, I want to focus our attention primarily on our Tonopah West project, because we just got it. We've got another project called Silver Cloud located in north central Nevada. It's a very grassroots proposition, but it's at the top of the largest gold mining complex in the world, 45 square kilometers. And it's the definition of target rich, but it's also the definition of grassroots. Now we're working our way through understanding that, and we've got a big program planned for that later in the year. So I hope to come back and tell you more about that. But for the purposes of this call, I want to bring your attention to what was one of the most significant precious metals district in the United States, this time 100 years ago, and that's Tonopah. Tonopah district is about 4 miles wide east to west. And in that 4 miles, it established itself as one of the largest silver districts in North America, the grades of which would make Einstein blush. There were over 50 grams per ton gold equivalent that it produced at over 50 years. And we see huge upside potential. And it, as opposed to Silver Cloud, which is a very grassroots endeavor, we've got a 50-year production profile on our property. And we're the first group to target the historic working since production shut down about 100 years ago. Now, I want to draw your attention quickly to our stock chart. It's not to show anything other than what's happened since around April. Well, mid-March, obviously, there was a huge sell-off. End of February is when COVID happened. World Health Organization started putting out some pretty, not so good news about the pandemic. But what happened on April 2nd, something peculiar. That was the day things turned around for Blackrock. That was also April 2nd, coincided with the day that we signed an option with Ely Gold Royalties to acquire 100% rights and ownership for the Tonopah West project, which effectively covers more than half of what was known as the Tonopah Silver District. Since April 2nd, when we closed that deal, we've traded something like 25 million shares. We also sold about $4.5 million worth of stock in the form of a private placement, largely led by institutional investors, many of which don't normally play in this side of the kiddie pool, but that's because they realized that, I think we got our hands on what was a monster, and it didn't shut down because they thought they ran out of gold or silver. So what is Tonopah? Well, if in the gold context, if all roads lead to Rome, we got a highway that leads right to Tonopah. We're halfway between Las Vegas and Reno, and we've got the largest consolidated land position in this district. This is a district that produced 174 million ounces of silver, nearly 2 million ounces of gold, and it was from a very small amount of rock. These are ultra high grade veins we're talking about. And you know what, back then they didn't have to do any drilling. Discovery was made at surface and they got to mining it right away. They followed these veins right from surface all the way down dip in a long strike. Now, what's unique to find in veins is widths. Well, these veins, one of the veins on our property and the first target of ours that we're going to be drilling into is something called the Victor vein. The Victor vein was 24 meters thick when production turned around. They actually didn't stop mining Victor because they thought they ran out of ore. What happened was in the mid-1920s, it was a confluence of two veins. They were mining this thing for over a decade, and then they hit water. Well, guess what wasn't all that reliable in the 1920s? Electricity. Well, unfortunately, they had their fortune staked on the electric water pumps they brought in to pump out the water. In modern standards, the water they would have been dealing with mining this 24-meter thick vein, and from a silver equivalent basis, the district averaged over 2 kilogram per ton silver over the 50-year production profile. They didn't stop mining it because of that. They stopped mining it because of the water. Every time they turned the electric water pumps on, it would cause rolling blackouts and brownouts, which isn't what you want in a water pump. Now, we've got the largest consolidated position in this district. It was discovered in 1900. It is a silver primary district, which is very, very rare in the context of, well, silver is normally found as a byproduct of industrial metals, say copper, lead, zinc mines. Now, who knows what's going to happen in terms of the industrial demand moving forward? We're sort of entering uncharted territories, but the outlook for gold and silver's never looked better. And Tonopah was known to produce at 100-to-1 silver-gold ratio. That means if lead or zinc or copper, if those massive monster mines have to shut down because of depressed prices, they can't capitalize on their silver credits. Well, guess what? We can. We're a precious metal district. Normally, you'd have to go down to Peru. Normally, you'd have to go down to up into Alaska, far-flung places. As I showed you before on the map, this is halfway between Las Vegas and Reno. We've got a highway that cuts right through the town, and a 50-year production profile, which not only leaves us with a lot of exciting, untouched prospects underground, but there's about a 50-year production profile of historic mine dumps and tailings that were left on surface. And what they were extracting back then in terms of metallurgy is very different than what one could expect now. So we've got stuff, we've got opportunities both at surface and underground, which we're targeting. So this is going to bring you all to a history lesson, and I wish I paid more attention to it back in history class in my later years in high school. But the 20th century was certainly a turbulent one. The discovery of Tonopah was made in 1900. The red line there shows the production profile in gold equivalent ounces. This thing was an absolute monster. From the year it started producing to the year it hit its peak, it was about 10 years. Right away, mining it from surface, the grades they were realizing were over 10 kilograms per ton silver equivalent right from the start. On a 50-year average basis, which was the production profile of the district, the average grade was over 2 kilogram per ton silver equivalent. This is high grade stuff. They produced, it's one of the largest silver districts in North America, but it was from a very small amount of rock. As I said, it was 4 miles long, east to west, and we got half of that. Now you'll see the grades there. On a gold equivalent basis, it started off very, very high. Average was 50 grams per ton. The blue line there is the silver equivalent basis. Now that started at 10 kilograms per ton. They started mining this right from the top. The veins near surface were supergene enriched, which saw the grades just off the charts. But you know, infrastructure, proximity, everything. I mean, this in modern context, if we are able to achieve anything close to this, this would be a tier 1 deposit. That's not just me saying this. This is a newspaper clipping from the mid-1915s. Tonopah is the silver mining center of Nevada, one of the greatest mining districts in the nation. It's almost as if Trump wrote that himself. Here's a photo of a property. So as you'll see, the town of Tonopah is actually on the right side. Now the town of Tonopah was actually built right where the discoveries were made. This was frontier mining sort of stuff. You had some very big names from the early 1900s coming through there. Charles Schwab was one of the biggest sort of players in the district back then. He owned what consists now of a lot of our property portfolio. Wyatt Earp came through there and set up a bar on our property. But it's, you know, this is a district that's been hiding in plain sight pretty much ever since production shut down in the 1940s, once World War II was raging. And you know, there's the old adage, and the old adage is that silver districts aren't discovered, they're consolidated. And that's exactly what happened here. We've got a massive parcel of land. We're easily the largest claim holder in the district now. And these are all patented claims, or the vast majority of them are patented claims. What does that mean? It means they're privately owned. These claims, back when the discovery was made, you had all these claim stakers coming in, working them. Now they limited the number of claims that any individual family, person, corporation could have at the time. What happened was these claims have been consolidated, and then they've been passed down through generation and generation and generation for nearly 100 years since I guess Tonopah was in its heyday. What happened, and the reason that this has been hiding in plain sight for so long, was that it took multiple individual parties to consolidate these claims. When we signed our deal with Illegal Royalties, I mean, they quarterbacked this process and we're just the beneficiaries. But they had a private company that one of their subsidiaries, they'd spent a long time consolidating those. And then there was a third party that had spent a long time consolidating the vast majority of the claims too. And when we signed the deal to get these, it was the first time this entire package had been brought together. It gives us the entire western side of the district. Now, the district itself, 4 miles long, east to west. It's an east-west trending vein system. The discovery was made on the east side of town, and effectively what happened was the miners came in, they started mining it from surface, down dip in a long strike all the way to the west. So the west side represents the blue sky. The last production in the district was on the west side of town, which was one of our targets that we're drilling into now. And part of that, early 20th century history was, well, it was topsy-turvy time. You had World War I, which sent costs through the roof. You had the Great Depression, the establishment of the Federal Reserve. You had World War II, and you had silver prices and gold prices absolutely collapsing in a very quick period of time. From 1923, I believe the silver price was $1. By the 1930s, it was down to about 35 cents. That, when you're competing for basic materials with wars, that sends hard costs going up. You're realizing less gains and profits from the silver prices, and that was effectively the nail in the district's back, nail in the coffin back then. So we now have this for the first time since production really shut down. We've got this largest consolidated package of claims that anyone's had in the district, and we're the first one to go back in and target what these historic miners were mining. And as you saw in that graph, I mean, 2 kilogram per ton silver equivalent over 50 years, that was the average. They had up to 10 kilograms per ton silver equivalent right from the start. So what does our package consist of? And what are we doing right now? Well, we've got the first drill campaign going in, well, ever, targeting the historic workings. We're drilling into 3 past producing operating mines. The Victor shaft is our first target. We've already drilled 3 holes into that already. The Victor shaft, which I'll hand over to Bill shortly and he'll show you, was 24 meters thick by the time they mined it down to the 1880 level and they encountered water and had to go somewhere else. Our target number 2 here, listed right here, this was represented the last production in the district. This was a confluence of 3 really name brand veins, and then there was a couple sort of forks. This was something that they mined down to the 1650 level. They did development work along more of it, but they got turned around when silver prices absolutely collapsed and never got to mining. The Ohio vein, which is target number 4, was one of the richest and highest grade veins in the district. We think we figured out that, and we're going to be drilling into that. And then we've got a new discovery, and the new discovery was from Core Mining, which is about $1.6 billion market cap US, one of the largest primary silver companies in the world. They had this portion of claims, which represents target number 3. They didn't have the portion that represented all of the historic production and our 3 other targets, and they hit 700 gram per ton silver. They hit 9.7 gram per ton gold, and they hit another vein with 400 gram per ton silver and 6 gram per ton gold. And no one's ever followed that up. They left the district because they ended up acquiring another company called Northern Empire, who I'm sure many of you know, and they're putting all their resource into that. But they had 40 claims. Our total package is 114. We've got the largest consolidated land position down there. As I said, this isn't a grassroots proposition. We're targeting known veins. We're targeting, we know the orientation, we know the strike, we know the dip, and we're the first group to ever get this consolidated package and have a meaningful foot in the door here, and we're going to be drilling into something good. So at this point, I'm going to hand over to Bill Howell, who's the driving force behind everything going on at the project level, and he can take you through the model, because seeing something in the abstract is meaningful, but seeing something in 3D and the 50-year production profile that we have to work with, that's going to be something special for you. So I'll hand it over to Bill now.
Okay, good afternoon, everybody. Thanks for joining us today. What I'd like to just show you first is a map of Nevada, and as many of you know, Nevada is known as the Silver State, and that's really because of the Comstock node back in the 1860s. If you sort of look at Tonopah district, or what they say is, you know, the Comstock put Nevada on the map, and Tonopah kept it there. And if you really look at what the value of the Tonopah district is, say, based on the GDP of the early 1900s and whatnot, we're probably looking at something that's worth over $200 billion worth of silver that came out of the ground there in today's dollar. And I can guarantee you, if I went to Silicon Valley and I told people there was $200 billion buried somewhere in the deserts of Nevada, people would be hopping in their Teslas and riding their bikes over the hill to come and find that, figure out how they could build an app to find it. So it's a significant discovery in Nevada. Now, as I like to say, we're not starting with a clean sheet of paper. There was a fellow by the name of Nolan who went through all the underground workings in the early 30s and mapped it all and put together this 3-dimensional isometric drawing of the western half of the district. And we've benefited greatly from that in the fact that we've been able to take all of that information and the additional information that was gathered in the 70s and early 80s and put that all into a 3D model. Some of the things that Andrew has mentioned is the Victor vein, and this is a cross section through the Victor vein, and this is where it was that 80 feet or about 24 meters wide You can see all the square sets in here. So again, we're able to capitalize on what was known and how it was portrayed, and use that information into our geologic model. Nolan, as I mentioned, he was pretty detailed fella, and this is one of his maps from the 1880 level. What we've done is gone through and digitized and compiled all this information into a leapfrog model. This is where Andrew mentioned the last of the workings were, and what I like about this section is they show you where the veins are, and they made some reference to what was going on in this area. So over here in the Denver vein, you had up to 3.5 kilos that were sitting in the floor or the sill of the vein. And if you look here, they hadn't mined between the 1600 level and the 1880 level. And what we believe in there's about 500,000 tons in each one of these veins between those two levels and along strike. So this is one of our main targets. I also like, we probably couldn't use these kind of terms today, but you can see here that they've written on this section probable ore here and here. So that's the zone we're looking at right now with the drilling. Just geologically, our main ore zones are in what's called the West End rhyolite and the Mizpah andesite. Those are two of the most prospective rocks in the district. The andesite here, the Mizpah andesite, is really the host throughout the district, although you can see there's other scattered mineralization if you follow West Kirkland and those guys at Three Hills and Hasbrook Peak. You can see some other areas here above it, but our main zones are here in these two rock units. That's pretty much what the ore looks like. It's banded low sulphidation veins. They're high grade. You see a little bit of quartz, some calcite, and then these black sulfosalts associated with the silver minerals. Okay, we're going to leave there and we're going to go out and look at the model. So this is just looking at a plan map, looking down. What I've highlighted here is the outline of the property here in blue. These are some of the main shafts on or near the property: the Ohio, the Cashboy, the Victor, the McCain, West Tonopah. And what we're going to do is we're going to tilt this up, and we're going to look at the workings and how some of the veins all lie together. So these are the workings and the shafts. Here we're looking to the west, and we'll start to turn on some of the veins so that we can understand what's happening there. So this is the Murray vein, and this is one of the unusual aspects of the Tonopah district, in that you have these veins that are fairly steep on the north side, and they roll over and are fairly flat. And those things like the Ohio vein and the West End vein are these flattish kind of structures. You can imagine in the early 1900s to 1930, there wasn't any drilling done here. They basically, as Andrew alluded to, they started at the surface and they followed the veins down. Most of the veins that they found were flat. Most of the veins, were steep. But a lot of these flat veins they found by accident. You can imagine if you're drifting out, you're not looking above or below you, you're looking out in front of you. So the way they found these flat veins were they were raising between one level and another, and they went through the vein. So it wasn't an optimal way to mine it, but that's how they mined it, with a bunch of raises through these flat veins. Nowadays, in modern exploration, we have the ability to sit at the surface and drill some holes down. And so that's what we'll be doing. And that's this Ohio target over here on the southeast end of the property. Here again is the Murray vein. This is the steep portion. You can see the workings coming down, and it's really the intersection of two veins, the Murray in pink and this merger vein. And what we're looking at is this zone in between. That's where the goodies seem to hide. And so we have a series of holes coming back to the north, following this thing down dip and off to the north. Okay, let's look at some of the veins on the on the west end of the property. So this is basically where they stopped mining, based on all the underground workings or underground information we have. And you basically have another fairly steep set of veins, and so we're looking at those. And let's see here if we can turn on some sections. So this is the section we showed you earlier. Was hand drawn. This has been kind of enhanced with the computer, but really we're looking at the Denver vein, which is this Murray vein coming through. And then you've got the Paymaster and the Merton vein. And each one of these has the potential to host about 500,000 tons in the 15 to 20 gram gold equivalent range. And so, we're looking at something that could be fairly significant. There's no work that was done to the west. There was one hole roughly 1 kilometer to the west drilled by Chevron. It had some low-level gold in it, but we believe that there's an opportunity then to extend those veins off to the west. I'll just put on our drill holes so you can see what the plan is. These are planned drill holes. As Andrew mentioned, we've completed these 3 holes up on the Victor vein. We're currently here drilling this site 2A. We'll work on this section here. That's where we saw that probable ore in those sections. Down here is the new discovery area, and over here is what's called the Ohio vein offset. So we'll take a look at all of those. We're just started. We're just completed our first shift in drilling, and we just started up after the 4th of July holiday. So we're just starting this hole today. And with that, I'll pass it back to.
Are you excited, Bill?
Am I excited? Yeah, I am excited.
Me too. It's incredible. It's one of those things that if you're outside of mining, you wouldn't understand how these sort of opportunities could be sitting there for 100 years. I mean, mining shut down in this district in the heyday was the mid 1920s when the silver prices collapsed. But there's some small scale mining going on till the 50s. But it's amazing that this opportunity could be sitting halfway between Vegas and Reno with a highway going through it in the heart of the Walker Lane belt. There's literally Bill went and got A&W root beer floats for the drillers the other day, so the ice cream didn't melt by the time he brought it to these people. It's pretty incredible that in Nevada, we're not talking about Timbuktu. I mean, it's pretty incredible that these opportunities exist. And as we said, it's for silver and 100-to-1 silver gold ratio. It's not about making the discovery. It's about consolidating these historic districts, and that's the secret sauce here. The board pulled the trigger on this acquisition before I could even point out Tonopah on a map. This was something that was too good to be true. I don't think I'll ever have targets juicier than this in my career. And it's amazing. We hit a 9-year high in precious metals today. So things are lining up well. At that, I'll hand it over to David, and if he's got any questions.
Great, and I would like to make a comment about Andrew and Bill. You'll find in the mining industry, the people that do it once do it over and over again. And that's certainly the case with Andrew and Bill. They've been at this a long time, and they've had a lot of great success. Pleasure, as I said, to work with them. Let's start with.
I hope this is my last time, to be honest. Once this, this will be enough for me if it's as good as I think it is. But yeah,
no doubt about that, Andrew. And it's not because of your age either.
There you go.
All right, we're going to start with our friend Chesley Morton. Chesley, today questions. You probably knew Bill from Rye Patch, right? Chesley, you there? Okay.
Chesley's on mute.
Yeah.
see if I can unmute. Okay, is that better?
That's
Okay.
better. Okay.
Thank you, David. And I've got to say, this is an interesting introduction to Blackrock. It's a really fascinating story. I've been to Tonopah a number of times in the past, and I think its reputation is pretty solidly founded. With regard to one of your proposals for dewatering, it's sort of a Cecil Rhodes story, I guess, in that you've got better pumps, I suppose you're saying, or more dependable electricity. But what about the environmental concerns? You're in a region there, water is a pretty touchy subject. You start dewatering, you lower the local water level, you get people excited. So how do you approach that?
Yeah, Tonopah is an interesting place because it doesn't get its water in the same basin that it sits. The water comes from about 40 miles away in the next valley to the east. And it's actually just, the water source is just south of the Round Mountain Mine. So they've never really worried about water here. What I can say is if we started pumping water in Tonopah, I would imagine it might make some people here in Tonopah happy.
In the sense of potable water or something for the land given to
Both.
local crops?
Yeah, both. There's somebody trying
well, that's
to start a marijuana farm, so they might be quite interested in the water.
Maybe you can work a sort of a swap with them on something. With regard to the obvious question, I guess everyone asks, is Ely Gold gave you this concession. How the hell did you get that? And why did they go to all the effort to consolidate this and then only to sell it?
Yeah, that's a good question. Well, as you know, in this business, relationships are everything, right? So I had a very good relationship, or have a very good relationship with Jerry Bothman, who is Nevada Select Royalty, which is the wholly owned subsidiary of Ely Gold. And Jerry told me that he had a line on some patents and an opportunity to consolidate the district. I really like head frame exploration, so I said, let's do a deal, and we did a deal.
Okay,
and I didn't, and I was smart enough not to nix it, so I get some credit.
Xander told me his contribution was not to say no.
Yeah, well, that's a big contribution in this business.
Well, congratulations to you both on that.
Well, we got a lot of flack when we first picked this up. We signed the deal at the end of February, and we sold off hard, partially because the day we signed the deal was the first day that the World Health Organization came out with a worldwide health emergency order. And I mean, it coincided with the worst day in Dow history, followed by many more subsequent to that. But we went from 20 cents down to 7 cents in a matter of 2 weeks, and everyone said we were crazy. And then when we closed the deal, Bill and I didn't really do much marketing in between March and say April when we closed the deal, because why bother? If everyone's hiding under their desks and the sky is falling, they don't care about that you got one of the most significant precious metals districts in the entire United States, and you got to consolidate it for the first time. But after April 1st, you guys saw the stock chart. It's a story that sells itself, and yeah, this is going to be the equivalent of Harlem Globetrotters playing against whatever middle school team you can in terms of exploration. But we're excited.
I like the analogy. April 2nd, you said you closed this deal or announced it, and you did a financing. Was that at 7 cents?
No, we did it at 20 cents. We waited. We closed the deal on the 2nd of April. I think we announced the financing in early May at 20 cents, which coincided with our previous financing. So yeah, the sort of watermark there is 20 cents. We've obviously gone on a significant ride from 7 cents on March 15th to 42.5 cents. This week we hit our all-time high, so call that the six-bagger. But the best part is we only started drilling 3 weeks ago. We don't have any results back yet. everyone has been positioning themselves, pontificating about what could be. And in the interim, I mean, you're seeing some absolutely wonderful success stories make the headlines in the last couple of weeks. I mean, look at Vizsla. They're the exact same narrative of us. They consolidated a historic silver district in Mexico. They started drilling. They were 45 cents 3 weeks ago. They hit 1,500 gram per ton silver equivalent 3 weeks ago. They went from 40 cents to about $1.12 yesterday. And then in their second batch of holes, they hit 8 kilogram per ton silver equivalent. Well, those are the sorts of grades that we've got that we're targeting. I mean, we've got a 50-year production profile that shows that they produced a 10 kilogram per ton silver equivalent. We're targeting stuff that averaged around 2 kilogram ton silver equivalent. And we're not in Mexico. We're halfway between Vegas and Reno. So the fact that the market has gotten behind Vizsla so much in the past few days is really encouraging to us, because it's the same sort of stuff. They're targeting known strike and dip extensions of a historic district. So are we. So I hope that people have made a lot of money, and I hope people are looking at something that could be the next one, because the industry needs more winners.
Great potential. And one last question. With regard to that new high in stock price, do you have options and warrants in the money that you might be able to harvest for some working capital?
All of them. We just closed a $4.5 million private placement in mid-June that had a half warrant at 30 cents. Our stock, Bill and I stepped in May of last year, May of 2019. Blackrock wasn't a shell. It had management, and it had our Silver Cloud project. Didn't have the right management. Bill and I stepped in mid-May. I stepped in at 3 cents. It had a valuation of $1.2 million Canadian. Bill stepped in a week later. I think we were all at 4 cents then. Effectively from there, I think as of today, we're around $35 million market cap. All of the financings we've done have been accretive. They've been on higher and higher valuations. So that leaves us with a plethora of warrants, the highest of which are priced at 30 cents. That would see us funded with an additional $6 million if we have any exploration success. So we're in as good of a position as you could possibly be in for a mining company. We've got 7,000 meters of drilling, which we're in the process of completing right now. Assays are pending any day. I mean, honestly, we started drilling 3 weeks ago. We're using RC, so it's quick and dirty. We don't need the core to guide us. We've got 50 years of mining workings, production profiles that we know exactly what we think we're going to be drilling into, and ultimately the assays will do the talking, but it's only a matter of time now. So yeah, it could be a very fun few months, but certainly seeing what Vizsla's done recently, I think that lays a pathway for other similar stories.
Thanks, guys. And back to Dave, I think.
Thank you, Chesley. Appreciate your questions. Let's go to Doug Loud. Doug? Doug's muted as well. Give him a second. Okay, let's go to Heinz Thoma. Heinz?
Heinz, can you unmute yourself?
Thanks for the presentation. Very interesting. What's your budget for the drilling? How long does the money you raised last?
Yeah, the budget is 1.6 million US. That gets us the 7,000 meters. We raised 4.5 Canadian, which is roughly 3.5 million US. So we have some left over to go back and follow up on some good results.
And with any exploration success, I mean, we've got about $6 million worth of warrants priced between 16 cents and 30 cents, which with any volume we'll start to see exercised. I'm sure we've already seen a whole bunch exercised. I mean, we've had some very big volumes in the past few days here. So Yeah, the goal is the goal is with success, we're not just going to do 16 holes, right? The rig will never leave, but it's certainly what's going to happen is we want to connect on the dots, make this a rallying call. I mean, the theme of this drill program is shock and awe. We're drilling into 3 past producing mines. There was development work done along 2 of these. We're figuring out the 3rd, the Ohio vein, where we think they lost it, and we're following up on a new discovery. So in any reality, I mean, unless it's very disappointing, I expect we'll have multiple rigs going, and we'll be fully funded for the foreseeable future, which is a good place to be. But for now, the only place to buy in the foreseeable future is in the market.
Do you see yourself as explorers, or would you bring this to production if possible?
Well, I see myself very much like Christopher Columbus. I want, but I don't have to make the discovery. You know what? It's one of those things where the best place to find new ounces is at old mines, and we're in one of the most prolific districts in the U.S., and it's been hiding in plain sight all along. Now, there's lots of opportunities. I mean, at surface, we've got about 1 million tons of crushed rock at grades which are beyond what many operating heap leach mines are already producing at, and these have been studied extensively to scoping study level. There's plenty of opportunities, but at the same time, we're not in a far-flung jurisdiction. There's no one that holds really any controlling interest in the company that could, muddy the waters. I mean, if we connect the dots on this, we're showing 6 million, we see potential up to 6 million tons at say 21 gram per ton gold equivalent. There's a range in there, but I mean, we see potential for 3 to 4 million ounces of gold equivalent if we're correct. And if we're drilling in these 4 different target areas, it won't take much to have the majors calling. In fact, Core Mining already had, the grassroots portion of our project 2 years ago. Who's to think they wouldn't want the brownfield stuff? So we're getting close, but ultimately, we're in Nevada where there's casinos within walking distance of us. If you want to put it into context, I mean, the ball is spinning around the roulette wheel right now. It's been spinning for 100 years, and it's finally going to fall in one of those holes, and we'll see if we're right. But we think we've stacked the odds in our favor here.
Thank you very much.
Nice analogy.
Good to talk with you.
Nice analogy. All right, thank you, Heinz. Always a pleasure. James Qantas. James?
Yeah, James actually had to type his question in, so I'll read it for him. It is, given the higher risks at Silver Cloud, are you open to JVing all or part of Silver Cloud if West Tonopah goes gangbusters?
Silver Cloud's probably one of the best grassroots propositions available in Nevada right now, and that's what got Bill and I here. I mean, Silver Cloud was the thing to keep in mind with Silver Cloud. We've got 45 square kilometers on the richest gold mining area in North America. On one side of us, you've got some of the largest gold mines. We're crawling distance to Goldstrike, which is one of the largest gold mines in North America, and you've got 2 of the highest grade vein systems pointing directly at us. It's seen such little drilling. I would be rolling over in my grave if I was the one to JV or sell Silver Cloud before we were to do something really special with it. We've drilled 6 holes. Half of those are confirmatory holes because the previous operators had lost the core. The core is very telling, it guides us. The other half of the holes we drilled were to test a hypothesis, and in one area our hypothesis is proven correct. We're walking our understanding there forward. It's not going to happen overnight. I wish it would, but it's the definition of target rich. But the best thing we can do to realize Silver Cloud's potential is to get our valuation up and backstopped with a real tangible, not even brownfield asset. I mean, we're drilling into 3 past producing mines here. And we're the first group to go in there, and we know that they didn't stop mining because they ran out, at least in historical senses, of what they thought were ore. So we're going to switch what we did previously. We were using core. It was expensive. We needed it to guide us. We've got a much better handle on what's going on technically up there. We're spending a lot of money on geophysics right now. in Bill and I's perspective, I mean, the holy grail of exploration up in north central Nevada, but that's based on a wish, and that's a lot of speculation, and who knows. We don't want this turning into an expensive treasure hunt, but we're following the data and we're pulling at serious strings. So we've got 3,500 meters of drilling using RC budgeted this year. We're drilling in an area. A lot of that's going to be focused on the Northeast Veins target, which it looks like it could be the western extension of the Hollister deposit, which was, they produced 400,000 ounces at 34 gram per ton head grade, so one of the highest grade gold mines in Nevada, and it's pointing directly at us. So they mine those veins right up to our property line on our side. We've got 8 veins outcropping at surface with a mercury mine there, which when it comes to low sulphidation epithermal, I mean that's the mother of all Pathfinder elements. I mean, Bill, what do you think?
Yeah, I mean, I hate to give it up too soon. I mean, I think we have a real chance at discovery there. We've got a number of targets. As Andrew said, we've been able to put together our idea, and it's kind of come to fruition with the drilling that we've done so far. We drilled a little over 8 grams on a vein that looks like it runs east-west, and I don't know what the market was doing, but we had a couple of intercepts, one of like 8.3 and another one of almost 4, and I think it's pretty exciting. I mean, I want to follow those up and find out what they're doing. And then we've got a couple of other targets that we really just started to evaluate, one of which is right next to Hollister. It's got veins sticking out of the surface, has never been drilled. So I think it's a bit premature to maybe think about bringing a partner in at this point. I think when it gets too big and too high grade, that's when you should start thinking about a partner.
In terms of location, I mean, it's at the top of the largest gold mining complex in the world. And I mean, if Phil Baker from Hecla is looking at his claim map, I mean, we're the donut hole in the middle. We've got Hollister right next door, whose system points directly at us, east-west, and then you've got the Midas system, which is trending north-south, north-northwest, right at us too. And if you look at the geology at the project, I mean, it's massive. It's 572 claims. Half of our project looks very Midas style mineralization. The other half looks very similar to Hollister. So we've barely scratched the surface. No one's really, there's been 28 drill holes done on it at depth. To put in context, by the time that Great Bear had got their hands on Dixie, it had 160 drill holes into it. And then they made their discovery, and then they got to $19. We've got 28 that we're working with. We lost all that. Well, we didn't lose it. We didn't have that core to benefit from. We have it now. Our thesis is intact. But yeah, it's 45 square kilometers, veins outcropping, multiple mercury mines. I mean,
I drilled 6 holes, so I don't think I don't think Blackrock's really given it a good once over yet.
Yeah, it's a hell of a portfolio. I mean, to think that. And I mean, if you don't think that there's been some significant interest from some very serious groups, there's a value to Silver Cloud, and it's not something we're going to be giving up.
Well, that makes great sense. We're going to turn to Patsy Moran. Patsy, question today for the team?
Hi, yeah, thank you very much. I'm definitely interested in keeping an eye on Blackrock, and obviously you're early in the process, but then you have this wealth of information from the historic mining. And so my question relates more to the environmental permitting process, and kind of obviously you're not there yet, but what is the plan and how long do you think that'll take?
Well, I mean, obviously we're at the front end of the process, right? We're going back and evaluating some areas that were known, and looking to see if what we think is happening there is really happening. So, I mean, from an environmental point of view, obviously, we want to stay ahead of that. But at this point, our goal right now is to drill some gold and silver intercepts, and then we'll have to worry about the other stuff.
Very good. Looking forward to hearing more.
Thank you, Patsy. We're going to turn to Steve Rentschler. Steve.
Yeah, hi. I'm looking at one of your slides at that Ohio vein, and I'm not sure I have the orientation right, but you talked about supergene enrichment close to the surface. Does any of that potential exist as you go west on your claims?
No, the real supergene was where the original discovery was. I always like the story. It's the second assayer. So when Jim Butler took his rocks to the first assayer down at Goldfields, he looked at them and threw them out, so they were worthless. And it wasn't until the second assayer actually assayed the rocks that they found out that they were 10, 20 kilos of silver in rock. So I sort of equate that to modern day exploration in that it's not the first guys that find it. It's I think there was a study done that said it's like 2.8 companies have to go to a project before a discovery is made. So I like to think we're 2.8 right now.
Okay, and how deep do these types of systems typically go?
Yeah, that's a great question. Normally, if you look at these, they have a vertical extent of about 500 meters. This Tonopah is quite interesting because most of the low sulphidation epithermal systems in Nevada generally are, say, 200 to 300 meters in vertical depth. And Tonopah is really one of those systems that looks more like vein systems you find in Mexico, where you really have that, like Guanajuato, where it has that 500 meters of vertical depth to it. So this thing, what we know right now from the elevation differences is it's right around 300 meters thick so far, but there's still mineralization at depth, right? They mined some of it.
And similar to Mexico is the thickness of the veins. I mean, having something that's 24 meters thick is unheard of in Nevada. And Tonopah was known for some very, very thick, rich veins. So, I mean, our first target, and we've got, I believe we're planning 5 holes into Victor. We've drilled 3 in there so far, and we'll go back for the others. But I mean, our first targets, when they turned around, it was 24 meters thick. So call it 100 feet wide. Call it, I don't know how many 100 meters of strike that we're testing, and then down plunge too. You can build some serious tonnage very, very quickly with just a little bit of luck if we're talking about anything in the order of historic grades that they were realizing. And you have to think that, when they turned around, they were still mining stuff that was economic, and that was 1920s economic. It's not 2020 economic, right? So we'll see. Ultimately, the labs are going to, tell the tale, but we're excited. We're excited.
Yeah, I mean, just to put it in context, I mean, we're following up on something that was 80, well, let's call it 20 meters wide, 200 meters in strike, and had 100 meters of depth potential left on it. So if we're correct, that's quite a few ounces.
And how about when that comes up to the surface? Because it almost looks like an anticline there, that Ohio vein. Could it get thicker or more dilated? No.
Yeah, no, you're exactly right. That's a good observation. So one of the things you see are these really steep veins on the north side, and they seem to roll over and are fairly shallowly dipping to the south. And that was a big, back in the early 1900s, there's many Supreme Court cases on apex rights of the Tonopah veins. And that was eventually resolved by the Supreme Court dictating that there were no apex rights in Tonopah, that wherever the vein was, you owned the vein.
And just one last quick question. Do any of the historical workings, are they of any value? I mean, dewatering, giving you underground platforms, or can you do this all from surface and you would just start from scratch?
Yeah, we would have to start from scratch. My understanding is there's a lot of dead bodies and old cars been thrown down the shaft. Probably pretty hard.
Leave it alone. Okay, thanks very much for the questions. Thanks.
Thanks, Steve, as always, for your insightful questions. Let's go to Victor Zhao. Victor, question today for the team?
Hello?
Might be muted. Yep.
Yeah. Okay. Thank you for the presentation. You mentioned the budget. You will drill 7,000 meters. My understanding is that you are drilling currently at now.
Yeah, we've
So,
been drilling for 3 weeks,
oh, okay, yes.
and we'll be
So
going through summer. Yeah, we've got a lot of drilling left. We're on to hole 4, which is our second target now, and we're gonna go, a couple holes in each target, and then come back and finish out the program with all of them. But yeah, we're making quick work. Our first holes were our deepest, the Victor shaft, which was our target number 1, the 24-meter thick one. That was mined down to the 1880 level, so that would represent the deepest holes of the program. So imagine if we've done, 4 holes by now, or onto hole number 4 by now after 2.5 weeks of drilling. Some of the stuff we're targeting will be much closer to surface, so we'll pick up that pace too. But because we're using RC, there's no real processing times in terms of logging the core or having to cut the rock. So yeah, it shaves off a lot of time in terms of getting results back from assays too. So we're hoping to capitalize on what we're seeing as an emerging silver bull.
Thanks for your question, Victor. We're going to turn now to Scott Edmonds, who's going to ask some of the questions that came in from our audience.
Yeah,
Please.
great. And I did want to point out we have a bunch of questions. If we don't have time to get to all of them, we will certainly get them to management and have them get back directly to each person. First question, I'm assuming RC drill results will be out within a week or 2 and that historical data will be borne out. Is this the extent of the 7,000 meter drill program currently underway, i.e. to prove historical AG/AU resource grades?
We're targeting 4 different areas, so each one, I mean, we're following up on a new discovery as one of them made by Corp 2 years ago. But the other 3 are drilling into 3 past producing mines. Everyone's going to be different. I mean, they're, even though we're in the same jurisdiction, it's going to be like snowflakes. Everyone's different. We hope that the historic records model, as indicated, but we've got high confidence in all of these, and I'll hand it over to Bill here. But each target is something new, so.
Yeah, so what this program is doing is looking for some of those extensions, like in the Victor area. Obviously the mining was stopped because of a technical issue with the water. So we're following that vein down dip and down what we'll call plunge to see if it continues past where they mine. We believe that it does, and given the first part of it, the assays generally take between 4 and 5 weeks to get back. So, we've just submitted the first few holes. We generally pick up samples every week. So we won't be putting out hole by hole. We'll package the holes up by target to release them, because it won't make any sense to put out one hole to somebody. I mean, it just makes more sense to have them as packages. And yeah, so I mean, the drilling is to confirm the down dip or strike extension of these areas, and then follow up on the discovery area in the southwest part of the property.
And you saw some of those hand-drawn sections that Bill showed previously. Those aren't drawn by us. Those were drawn about 100 years ago by the historic mining companies. So what we're going in, I mean, some of these are confirmatory holes and others are to confirm along strike. But these are as juicy of a target as I'll probably ever see in my career. So it's just a question of now, if I could shave down the time of getting the labs to process the cores, I would, because I'm having trouble sleeping.
Great, thank you. Next question is, would Blackrock consider synergistic M&A opportunities, e.g. Ala First Mining and Treasury Metals amalgamation of the Goldland and Goliath projects respectively, to leverage G&A cost efficiencies and possibly achieve increased scale and visibility at the same time?
If you want to look at from a satellite view or from a plan view map, Bill's the first one to draw this comparison. But if you look at core mining, they've got the Palmarejo district in Mexico, and it looks very similar to what we're seeing down in Tonopah, which is we've got this ultra high grade vein system. You know, we're drilling into it. We hope to find those grades, but if they're there, man, there could be something really special. And then right adjacent to our property is West Kirkland Minings, and I believe they just changed their name to West Vault Mining. But they've got the Hasbrook and Three Hills deposit that back up right onto our properties. And those are lower grade open pit, you know, low sulphidation epithermal halo sort of, you know, properties. So they're lower grade. They're maxed out at probably like 1 million ounces each, probably less. But what you see is if you look at combining the district, all of a sudden there could be some Palmarejo type mining complex things where you've got an ultra high grade vein system and then some lower grade strings of pearls, I guess, leading off there. And yeah, there could be some synergies. You know, 20 miles, we're a half an hour drive from Round Mountain, the massive Kinross project. Allegiant Gold has their east side deposit. I mean, the Walker, Tonopah is at the center of the Walker Lane district. This is where everyone stays. That's where the hotels are. It's the center of the universe. As I said, if this were Roman times, Nevada's Rome, and Tonopah is the center of the silver universe down there. So yeah, there's plenty of corporate development opportunities. We're open to anything and everything. And you know, we're so widely held from a retail basis that someone were to make an offer, that's up to the shareholders.
Great, thank you. The next question is, I would like to know why the approximate 1 million ounces in the Saddle South wasn't mentioned in the recent news release and when it might be mentioned, and why the resource in the Saddle North was not given in gold equivalent ounces.
I don't know what, you're probably referencing another company because we don't have anything in our portfolio that would relate to Saddle North or South.
Okay, it was emailed in, so.
That's
Oh.
GT Gold. They got it wrong. Okay.
Yeah, that is GT Gold. Yeah.
Sorry about that.
That's a hell of a discovery. but that's Golden Triangle.
Okay.
We're in Silver Central, different jurisdictions.
Is the mining, here's the next question then, I hope it's the right one. Is the mining industry planning for much higher oil prices? Shale oil is cratering and conventional oil production has been flat for the last 10 years. So will open pit mines become uneconomic if the price of oil increases? And is it even relevant since you're probably going to be underground?
I'll hand that over to Bill. We're going to be, if we hit anything like we're hitting, we're going to be the underground mining play in North America. But Bill, what's your outlook on oil?
Yeah, well, I mean, if shale fracking goes up, I mean, oil will go up, but most mining companies have the ability to hedge oil and their, you know, and their production, right? So I'm sure they'll get in a back room somewhere and they'll figure out how to, you know, what the right thing is to do with oil. I mean, it's diesel is a big component of the mining process, right?
Mm-hmm. Great. Next question is, do you own the tailings at Miller's?
Not at Miller's, but we own the tailings in Slime Wash.
So the stuff on our property we own.
15 miles to the west of Tonopah.
Okay. Next question. Will Blackrock be overstretched in terms of expertise in human capital to maximize mine development opportunities at both Silver Cloud and TW organically?
Well, we have a small staff, right? So we have myself, another senior geologist, and a junior geologist, and a drill foreman. So right now we can handle drilling on all of our projects and geology and that kind of stuff. You know, we'll have to contract out or consultants for any kind of engineering design work if we were to do, say, an exploration decline or something like that.
Bill's being, he's being humble. Bill was head of exploration for the Americas of Placer Dome, which at the time before they were taken out by Barrick was the mover and shaker in Nevada. I mean, he used to oversee 32 drill rigs going on at one time a day, and he was switching 16 of them. He had 100 geologists under staff. He's to get Bill when we were about $1.5 million market cap this point last year was the coup of all coups, and he's also the reason why we have Tonopah. So everyone should be sleeping at light that we can handle 2 projects. Certainly a grassroots proposition that we can get a team of field geologists out there and maybe a project level one, and someone like Bill handling everything going on at Tonopah, which is what Placer Dome did best. This is mine expansion style drilling. So we're gonna hopefully see multiple drill rigs coming if our modeling is anywhere close to correct. But yeah, we got the bandwidth and he can hire for it. So
Many of the great projects in production today came out of Placer Dome. I mean, it was one of the most successful exploration companies ever, wasn't it? Bill, wouldn't you say? I mean, really.
Well, if you look at
Great geology.
Barrick's tier 1 assets, the bulk of those are old Placer Dome projects, right? Like Turquoise Ridge, Cortez, Pueblo Viejo. So I think they have 5. I believe 3 or 4 of the 5 are previous Placer project.
Yeah, it's great.
yeah, he's the heart and brain of the operation, and I'm probably like a kidney. I'm sort of dispensable. There could just be another one, but
No,
Yeah,
you're
I question here by Steve. I can't read the name because it didn't come up all the way.
Yeah, I was going to say Steve had a follow-up.
Steve Rensford? Okay, yeah, let's go to Steve. Sure.
Oh, he wrote it here. Yeah, I don't know if he wants to.
Yeah, I'll just read it for him. So Steve is asking if Andrew says that the assays are any day and Bill says they just got sent out and it takes 4 to 5 weeks, which one of those is right?
So can I?
we started drilling through.
So
Sure,
we
Bill.
for 3 weeks, and we send samples out every week. Okay, and they take 4 or 5 weeks to process. So you can do the math. The next set of assays should come out in 2 weeks, right?
Okay. Great, and I think the last question really is for you, Bill. Question for Bill: if you have an XRF machine on site to examine the core, what are the preliminary readings?
Well, let's see. We don't have an XRF, but we're kind of old school. So what we see is this is a typical low sulphidation vein system, in that the host rocks are pretty much unaltered until you get to the veins. And right around the veins, we see propylitic alteration, or a lot of green minerals. And then we see a lot of white minerals and quartz and some black sulfides. And that's where the goodies are.
But if we hit, we're going to look at buying an XRF machine. So
yes, we can say we have one.
So it's on our Christmas list.
Great. Well, I will. There are a few other questions. I think you've already touched on most of them, but I'll make sure you guys get a copy of everything just in case.
Thank you, Scott.
Perfect.
I just want to turn it back to Andrew and Bill for closing remarks, please.
Yeah, well, listen, we covered a lot of ground here. I mean, we flew at 30,000 feet, and then you saw in the model. I mean, we're not starting with a blank sheet of paper here. We got 50 years of production data, all the underground workings. We're using RC for a reason. That's because we don't want the core to guide us. We just want to drill for grade. We're going to do quick and dirty, and if we go back in, we'll do some core after this. But this is as exciting of an opportunity that I'll ever see. It was something that we pulled the trigger on right away. We beat out some serious groups that have since approached us, jealous and jealous of the lack of bureaucracy of junior miners. And now it's just our fate's in the hand of the drillers, Bill, and the assay lab. But we'll know shortly whether it's 2 weeks, whether it's 1 week, whether it's 5 weeks. We've got what, 11 other holes to drill. Every target is different. And all of them could build a tapestry of something really special from that would capture the eyes of a tier 1 miner if we're anywhere even close to being right. We don't have to be very right for this to be one of the most special stories of 2020.
You're talking weeks, not years, right, Andrew?
That's right. Well, I need to sleep at some point, and I'm looking. This first set of assays from the lab that are keeping me up.
And to Bill. Bill, any closing remarks? Bill Held?
Oh yeah, I just want to thank everybody for listening to the story, and as you can see, it's pretty exciting. We've got 2 really good projects, and Tonopah's underway, and we're drilling, and we should see some results in the next few weeks.
Andrew and Bill, and I want to add that, this is at a very propitious time. It's over a decade since we've had this kind of precious metals market. So the timing in this industry is always very important. So it's a real pleasure to be working with Bill and Andrew. And I also want to thank everyone, our panelists and everyone for your attendance today. It's greatly appreciated, and we'll be following up for your feedback. Wishing everyone a pleasant evening. Take care.
Bye-bye.